From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney.
And I am Tessa Ercilia. Welcome to the program. Another Monday, and sadly another down day, but mostly driven by, we saw iron ore prices falling over the weekend, so that was really weighing on the Australian market. But of course we had the French elections as well.
Yes.
We'll get into all of that. But what is the market doing at the moment, Nadine?
Well, last I looked, we had 9 out of 11 sectors lower. So it has been one of those sessions. The market is down by about 0.7%. So yeah, it's not looking very good. Just on iron ore, I think it's one of our key themes today as well. We did just speak with Vivek Dar from Commonwealth Bank on his outlook for the price of iron ore. So if you'd like to go online, ausbiz.com.au, you can find that interview there. He's super smart and gives us a really good rundown of where he sees iron ore prices. We've got that China third plenary coming up. So I was doing a bit of reading. You know, Citi, for one, is expecting volatility in the price of iron ore leading into that. They, though, say fade any iron ore rally. So interesting one to watch.
That is interesting to watch. And, you know, I grew up in Hong Kong, and whenever you watch statements from the PBOC and as well as, Chinese government, you have to interpret where the support is going, and that it's not entirely market driven in that sense, in that there's a lot of backing from the government, and that's where investors look to see where the support is going to go next.
Well, and the question is, will the support go to the property sector, which of course would be positive for Aussie iron ore? So Tessa, you're a French citizen, aren't you?
Yeah, I am.
So
it's
what
the
do you
only
make
citizenship
of the...
I currently have. I used to have more, but yes, the only one. Yeah, it was a really interesting weekend. Been watching it overnight, and as we know, they veered very firmly to the left. Now, one thing I know, I read some analysis saying that the markets would be more scared actually of a far left over a far right. But at the end of the day, we have to remember as well that the left that had just won in France, they're a coalition. So Francois Hollande, the former president, his center-left party is part of that coalition. So I don't know about the complete extreme, with policies, a lot of spending that we're expecting. So I think the biggest risk right now is that hung parliament.
Yeah, I was reading a CBA note saying that we could have a year before they're allowed to hold another election of just, a policy freeze, unable to get anything through.
Belgium, though, I lived in Belgium for 12 years, and they were able to go through a year and a half without a government. I don't know if it's okay if France did that.
Yeah,
so that's the biggest risk for the market. Yeah.
Okay. The other sort of key theme is, well, we saw iron ore falling, we saw gold doing really well today, but energy in general just losing a bit of steam. Let's get to the sectors, though, shall we? And here is the picture being painted when it comes to those big miners with BHP, Rio, Fortescue, South32. MinRes, all under pressure.
And usually when you have those big guys down, you've got the whole market usually dragged down, right?
Yeah.
So let's check the next sector that we're looking at.
I think it's energy coming up next.
Is it?
Yep.
Well, there you go. Woodside, Santos, Beach Energy, and Strike Energy down. They're just a general theme. The big names all down.
Okay, and taking a look at healthcare, maybe, no, it's also not one of those performing sectors. CSL, you add that to the big boys BHP and Rio Tinto, and that spells bad things for the market overall. It was consumer discretionary and infotech that looked all right today. We had that record finish on Wall Street on Friday, and so that lent some support to the infotech sector today. And just on that, we had an all-American special on the call today. It was really good. Ted Alexander from BML Funds and Jess Amir from Mumu joined me. So yeah, check out that edition of the call, either podcast form or on ausbiz.com.au. We talked some tech, we talked some biotechs, we talked some consumer sectors, and randomly Duolingo, which was a request from one of our... Have you used it?
Yeah, it's actually really useful. The kids love it too. Yeah, you can pick up.
You can actually pick up the language.
Yes, you can. I have friends who've learned an entire language, at least the basics, from just using the app.
Well, you'll have to listen to see if our guests would be investing in Duolingo. I guess we're being told to move on to the news of the day today.
Yeah, there you go. GQG Partners, we saw their quarterly results today. Funds under management at just over $155.5 billion US dollars as of end of June. So net flows year to date were over $11 billion. You can see it down just about almost 2% down.
Yeah, it's down, but it had a good day last week leading into this funds under management update. And I'm always told by my guests on the call to follow the flows. Regis Resources. So yeah, a number of these gold miners today had better than expected production results. That included Regis, it included Ramelius. So Regis also growing its cash and gold reserves by a record $109 million to reach $295 million.
Yeah, same with Ramelius Resources. So they hit the top end of their production guidance. I think it's just over 293,000 ounces of gold. And also we see gold as a hedge, geopolitical risk, but then the potential U.S. rate cuts comes. I think that drove up.
Yeah, cash and gold balance for Ramelius as well, almost $450 million.
And HMC Capital is investing up to $50 million in Store Energy. That is a specialist utility scale battery energy storage system. I think it's the first investment for HMC's energy transition platform.
Yeah, all right. And I think it's planning to raise up to $2 billion for that energy transition platform. So there's a few corporate stories out there. Let's find out what Josh Gilbert from eToro has had his eye on today. Josh, happy Monday to you. Not the best way to start the week here locally.
Good afternoon, both of you. No, not a great start to the week. Obviously, local market coming under a bit of pressure, and it does come, after we had a pretty decent lead from Wall Street on Friday. But of course, we've got, a lot of futures in the red today, European markets, US markets, broadly Asian markets are in the red as well. So quite a lot of weakness wherever we sort of look out there. Obviously, BHP, one of the biggest contributors to the decline today, with obviously iron ore coming under a bit of pressure as well. And we're obviously going to be seeing a little bit of uncertainty, I guess, just broadly across markets, given that we're in obviously a stage of elections and sort of a lot of sort of political talk at the moment as well. And we're certainly seeing that today.
Yeah, and what about just overview markets of the U.S. market, as earnings season is out Friday, and of course inflation data in the U.S. is a big one this week. What are you looking at?
Yeah, another record high from the S&P 500 on Friday. You said that a few times this year. I think it was the 34th record high from the index this year as well. And it's a bit of a juggernaut, isn't it? It seems really difficult at the moment to sort of slow it down. We're sort of seeing, economic data move in the right direction. I guess the next question then turns to, okay, we are starting to see economic data move in the right direction, but when do we start to sort of have that discussion potentially around a recession? Do we then have conversations around, a soft landing coming in place? Are the Fed going to be able to balance out, the slowing growth in the US, the economic data, inflation coming down, but also the jobs market is obviously easing as well. Rate cuts are coming. That's going to be a balancing act, and I think that's going to be the question that comes through over the next sort of couple of months. US earnings season, again, we're sort of getting closer to that double-digit earnings growth. Might get there this quarter. Looking for about 8.5% growth from the S&P 500. Looking at about 8 of 11 sectors should see year-over-year earnings growth as well. Going to be led by tech, communication services, healthcare, and energy. Going to be in there as well. Obviously, kick off this week with the the banks and the financials and names like PepsiCo and Delta, etc. I think the banks are going to be quite an interesting one towards the end of the week as well. They're actually expected to see an earnings decline as well. Obviously, in a high interest rate environment, it's going to be really interesting to see how net interest margins hold up, but also how the consumer is getting on. Credit deterioration, loan growth, all of that is going to be a nice sort of start to sort of earnings season and a good understanding of where we might be. So yeah, we see Q2 earnings as a positive, as a catalyst to keep seeing stocks stay at record highs, but it's got to deliver, and if it doesn't, then we'll certainly see some weakness from US markets.
Before we move on, I just wanted to say that we had an episode of The Trade with Jason McIntosh, and he said that historically there was a year where there were 70-something record highs of the US market, and we're at 30-something.
Okay.
There's still a way to go, according to him. It could still go up.
And that's online as well.
Yeah.
I saw it in the trending now part of the website as well. Speaking of trending, I was just looking at the eToro 5 top gainers in terms of last week, at least. This time last week it was all about coal, but it's pretty amazing that of the 5 top gainers, it's only Magellan Financial. Everything else is materials. Quite quite a marker of our market, isn't it, Josh?
Yeah, absolutely. I think it's just an understanding of when investors are looking locally, they're certainly understanding what they're looking for. I think, these days investors, if they are going to be looking at anything outside of that, they're probably going to be going to sort of the US, especially if it's for tech, especially if we look at the performance of the NASDAQ and those stocks over the last year. But having said that, we have had some great performers, Life 360, some of those names have done really well this year as well. Obviously, that coal story last week was obviously intensified by, the fires that we saw at the Anglo-American, mines. And I think what we tend to see as investors, will move towards that sort of news story. They will, invest in stocks that are ultimately moving and getting a lot of traction as well. And I think that's just part of, the retail investor these days. We've seen it with the likes of GameStop and sort of momentum trading. And, I don't think that's going to change for a long time, especially now we've seen such a breakout in sort of social media as well. There's a lot of information, a lot of news that investors get from social networks. X is a massive part of that as well, and it certainly does come through, as you say, in those sort of trading volumes and trading names that we saw within the last week.
Can I just ask, because when we are thinking about Bitcoin, what's going on with Bitcoin? Why is the price falling so much?
Yeah, so I think there's a couple of reasons. Look, as I said earlier, we're in this sort of stage of the year where we're getting to this sort of elections. We're getting to that sort of slight uncertainty, and when we do see investors go sort of risk off, which is what I think we're sort of seeing a little bit at the moment. Risk assets, are going to, sort of probably be the first to go, and Bitcoin is at the top of that list. More specifically, I think there's a couple of reasons. Firstly, we've got quite a bit of uncertainty around, the likes of Biden, and really, if we look at Trump and Biden, both of them are actually, I would say, pretty pro-crypto. Biden's, been in charge for the last few years, and we obviously haven't really had any pushback from him regarding crypto. He maybe isn't as pro-crypto as, say, what Trump is, but I think there's a little bit of uncertainty that maybe if he's replaced, the person that does replace him, might not be as pro crypto. In that sense, that's one side of it. We also have Mt. Gox, which is essentially a failed exchange many years ago, and it essentially holds hundreds of thousands of Bitcoin. And the fear is that is going to start to be passed back to creditors, and then that will be sold on the market. And obviously, if you have a huge supply dump like that in the market, somebody probably isn't going to be paying market price. And so the fear is that we're going to see prices drop on the idea that we're going to be getting more supply into market. And obviously, a lot of what drives Bitcoin is this sort of supply and demand dynamic. On top of that as well, I just think a lot of the news flow that we've had with crypto assets at the moment has been slightly more bearish than bullish. And when we obviously do start to see sell-offs, we've had liquidations that came through, which sort of exuberated the sell-off a little bit more as well. So I think more short-term, looking ahead, I think we're sort of looking towards September. That first rate cut from the Fed, I think, has been really positive for crypto assets. We've got an Ethereum ETF that's still sort of on the cusp of acceptance from the SEC. That could go live at any point over the next sort of month or two as well. So there are some catalysts that are sort of sitting around in the background, but they've got to come to fruition. And in the short term, we do see crypto assets coming under a little bit of pressure until those catalysts come to the fore. And that might be a month or two away.
And just briefly, Josh, because we cannot, I think, overstate the impact of China on the Australian market as we have seen today. So what are you looking for the next couple of weeks from China, and any change in expectations?
We've had quite a lot of positivity, I think, from China in the last month or so. We obviously had that new sort of stimulus measures and that support from Beijing in regards to sort of the housing market, which sort of has sort of helped things. We saw that in some of the economic data that came through on housing prices, and I think that has maybe in the last sort of couple of weeks maybe answered a few questions over whether we've seen the bottom for the real estate market. Of course, that has been the huge sort of drag there. This week, obviously, we get CPI on Wednesday. We got trade data on Saturday. It just continues to be, though, this same story where we maybe take one step forward, but then we seem to take two steps back. So I think, again, that real estate crisis is going to continue to sort of weigh heavily. There's question marks now, obviously, over whether that growth is going to continue. I think we're probably going to see them miss that growth target that they've sort of put in place as well. And then obviously we had the PBOC today that said they're going to be slightly more active in bond markets as well. So I think until we get that sort of, stimulus package, I think the market is continued to crave until we get sort of more policy support. I still think investors are going to sit on the sidelines. We really need to see a bit of a turnaround. I think having a look today, the Chinese local market is sort of been in decline for about 8 straight weeks. So again, it's really going to take something, I think, for investors to sort of move back into those local assets there. And I think that is going to come in the form of sort of a stronger sort of support package that we just haven't got yet. It has come in drips and drabs. We know what China is like. They're not going to sort of roll everything out in one go. They're not going to flood the market, but it kind of feels like we need something really concrete for investors to start having confidence back into sort of Chinese equities again.
Mm-hmm. Yeah. All right. Josh, look, thank you. Nice to see you to start the week. I hope you have a good evening.
Thanks, Josh.
Thanks very much, guys. Same to you. Have a great week.
Josh Gilbert from eToro joining us there. Let's get across some of the days. Well, big movers. Well, back to my U.S. special. Yes. I say my, very, very grabby of me. It was a good one. So for this All-American special of the call, we picked JP Morgan as the stock of the day. Ahead of the results, it has had a great share price performance since late 2023. So the question is it as good as it gets? There's Ted Alexander from BML Funds and Jess Amir from Mumu.
There should be a little bit of caution around JPM. So we do know it's the biggest bank. By far, it's actually the 11th biggest company in the SPX. So they do report on Friday. So we are expecting revenue growth for the year of about 7%. That's not very attractive when you think of the other sectors that are seeing very strong double digits. Indeed, in some cases, believe it or not, some stocks outliers with triple-digit revenue growth.
It has had a good run. I'd probably be somewhere else. I think that when you talked about costs being higher, I think this banks for bankers thing, there is going to be an increase in comp coming through there that is potential to derail, as well as spending on AI. They're desperate to then cut expenditure by spending on new AI systems, and I think that's not going to be a good economic efficiency in the short run. So I'm a bit worried about that for them. I'd probably rather look elsewhere in the US banking market, someone like a US bank core, as opposed to more of the investment banking model of a JP Morgan at this stage.
So Tessa just was saying, take some profits. Ted Alexander was a sell. I like what he said. He said, this bank is not run for shareholders. This bank is run to benefit bankers. I won't forget that one.
Yeah, very strong statement there from Ted Alexander.
And so we've got, we'll have some reporting U.S. quarterly coverage for you. So it always kicks off with the big banks and it starts on Friday. So we'll bring you some of those interviews and get them up online, of course, to get some analysis and some reaction when those big results come through.
We will. And so now let's have a look at who the leaders are for today. Red 5 Emerald Resources, both gold producers, and Red 5 commodities as well. Up 5.5%, almost 4% there.
Yeah, Coronado. So, another solid session for that coal miner. Nine Entertainment, interesting to see that ticking up. I don't see any news, and Pro Medicus was one of the worst performers last week. So perhaps a few bargain hunters moving in there today.
All right, and on the other end, we've got the laggards. IGO down 4.5% there. And Strike Energy. Is there news on Strike? I feel like I've seen...
Strike was one of those really beaten up companies last week. I'm just over enthusiastic, I suppose, investors did get when it came to one of their projects in WA. It just seems to be falling every day. But today, as we mentioned, was a negative day for energy in general, and that included Karoon, which was down by 3.5%. It actually had its price target cut 4.4% to $2.59 per share by Wilson's. Also, its price target cut by Jarden. That was last week, though, by 1.2%. But today, that price target cut came from Wilson's.
All right, and let's have a look at what's happening. Oops. Oh, not yet. We have the small end of the market, that is. So we've got the leaders for the small end of the market. Rex Minerals.
There's a takeover.
Yes, that's what's up, 61%.
Yeah, huge. And Fast Bricks, they have delivered one of their units. I think it's like a robotics unit to the United States. We called the company today. They couldn't come on, but up by 28%. Flipping the page, though, take a look at what's lagging in the small to mid cap space. And you can see there's just sort of a mix of miners
yeah.
coming through there for the most part.
Okay, now we do head on to what's happening overnight, U.S. consumer inflation expectations, consumer credit. And I also think I saw that Powell isn't he testifying?
Yeah, he is. I think it's later in the week.
Yeah, later in the week.
So the Eurozone Centix investor confidence has recovered to pre-pandemic levels, really being helped along by those interest rate cuts that are coming through in Europe. And just reading a Westpac note saying that the drying up of savings buffers may begin to see the growth in consumer credit. So we do get U.S. consumer credit slow. Yeah, so we might see consumer credit start to expand as people need to borrow to keep spending. So that's an interesting one. What's on tap here tomorrow, Tessa?
Well, we've got the NAB business confidence and Westpac consumer confidence. Would be interesting to see where businesses are at the moment. Of course, that all this kind of information just adds on to, I think, also what the RBA is to do next.
Absolutely. Particularly, it'd be interesting to see what consumers are feeling when it comes to inflation expectations. I had a chat with the former RBA Governor Philip Lowe last week, and he just still is saying that, if those inflation expectations get baked in, it's just disastrous. So you can check out that interview. It's up online, ausbiz.com.au. I also just thought, Tessa, I'd take a moment to just get our viewers and our listeners, importantly, across our next virtual investor event that's being held here on the 18th of July, I think it is. You can register by going to ausbiz.co/succession. So when we surveyed our audience at the beginning of the year, the majority of those surveyed said that their number one financial goal was to get some sort of a wealth transfer strategy in place. So that's what this event is all about. It's free, of course, as always. You just need to register and you can watch it live or on demand. So that's ausbiz.co/succession.
I'm not surprised. That's such a huge topic here, especially the generational wealth transfer, and
Billions,
anecdotally, I always hear
billions.
that conversation around. Just, interesting. So don't forget to register for that event.
All right, let's see where this local market did finish off the session. And so lower, 9 of 11 sectors lowest. Consumer discretionary was the best performing sector. But down by about 0.7% for the S&P ASX 200. That's the SIBO on screen right now.
Yeah, so hopefully tomorrow will be a better day.
Hopefully. We'll see what happens in the
shall
US
see.
tonight, of course. See if we can keep sailing on from those record highs being driven primarily by the MAG 7. I suppose we'll also be keeping our eye out for anything coming out of France.
MAG 7? Oh, and the France,
And see how that story evolves. And we'll be discussing that, no doubt, in the morning with you. We're live from 9:45.
So join us. See you again tomorrow.